Yeah, and I agree. I think those stocks will continue to do well because the fundamentals are working also. So they're working out. However, I just can't buy these levels. I think some are pure lunacy, frankly, at where they are. So like Cramer's been saying, hey, don't sell them all, but take some profits in some names. I mean, you've got the money in the bank. Let's play with the house money for a little bit, and there'll be an opportunity to get in at lower levels, even in some of those names.
Yeah, we're getting a little bit of a pickup again in the market. Dow's up now 62 or so. NASDAQ's by about 35. You see right there. All right, Rob Sechan, we've set the table for you. Where do you want to go with the meal now?
Well, listen, I think everybody makes a ton of good points just in terms of where we are right now. I would argue that the reason the market rallied, though, was because we did a great job from a complete policy perspective in protecting household incomes and also protecting the commercial infrastructure. And anybody that thinks that we've gone this far simply because of good news on the virus is mistaken. Anybody that thinks we've gone this far simply because of the Fed is mistaken. We've built a bridge to allow the economy to sustain while, we dealt with the side effects of the virus. The question is, has the bridge been built long enough? My suspicion is that it has. And so we're in an environment where I agree with Steve, we're probably due to see some churn. I agree with Tom Lee that we've probably come too far too fast, but that doesn't mean we're setting up for a massive sell-off either. I think a lot of ways markets correct are that fundamentals can catch up to where markets are, or alternatively, you can get some bad news where markets reset to fundamentals. I don't think we have enough clarity on the virus. I think the coverage has been broadly negative and, in my assessment, broadly wrong. If you look at hospitalization rates, you look at death rates, you look at the amount of testing we're doing, we've clearly flattened the curve. So we're on this progression, Scott, to opening the economy.
What have you been watching? I mean, we're heading towards a second peak. Hospitalizations are up. Record number of cases in California, Texas, and Florida. Record number of cases yesterday in the U.S. I mean, what are you talking about?
I watch the data every day, every single day, and I will tell you, from peak, hospitalizations are down significantly. Now, there's spots where there's increased contagion and there's increased hospitalization. You see it in Houston, right there, where we haven't been able to flatten the curve. It's clear we have to worry about the reopening of the economy.
I mean, if you're looking at it from a prism, are you looking at things just through New York? Because that's not the way to look at it now.
No, frankly, I follow Tom Lee on this data, and I think he's got a pretty good handle on it. The reality of it is, virus aside, okay, let's get back to what the
Maybe that's your mistake. You should follow Tom Lee on the market, not the virus. I follow Dr. Gottlieb on the virus.
I got you. The data that Tom Lee's firm provides is absolutely fantastic on the virus. Okay? Now, what I'm going to tell you is this. I think there is no will to shut down the economy again. I think there's going to be ebbs and flows on this, but the delta from horrible news is going to be incrementally positive. The challenge for me in advising clients is this. If you're invested, I think you have to take an approach where you look for durability of cash flow, durability of income. We found that in the new defensives, the tech names. That's why people have been buying them. I think now we've broadened out the conversation to the too big to fail cyclicals that are also going to be okay. So that's where we're staying invested. What's become a challenge is when you have new clients or clients coming off the sidelines. I think given the magnitude of the move, it is really, really difficult to kind of chase here. And so what we've been doing is using valuation levels, price levels to get clients engaged. I think in the intermediate term, we think it's going to be choppy. We think we're going to see volatility. I agree with everybody on this. It's going to trade based on the news flow. But past the intermediate term, where we have more clarity, where the economic data continues to improve, and the proof is in the pudding on the profit data, we will get more clarity. And I believe the bet to make is that fundamentals ultimately catch up to where markets are. There's not a disconnect between Main Street and Wall Street. That narrative, to me, is misplaced. What has happened is the Fed, policymakers have all stepped in. They've done what they're supposed to do, and the unintended consequences of that are some parts of the economy are not participating. We all get that.